And the Dow, I was mentioning the stocks were inching higher on Friday ahead of Christmas, although volume was low. And the industrials closed up for 7 weeks in a row, but failed to hit that 20,000 mark. Rob Morgan, Chief Investment Officer at Sethi Financial Group, is back with us now. Rob, what is the biggest headwind looking into the new year that you worry about?
Well, Dagan, it seems like every year analysts, when they're looking at what a market's going to do for the whole year, sometimes they can be a little overly optimistic. And as I mentioned, it seems like the consensus view is that the S&P 500 is going to grow earnings 10% next year. I think as we go through the year, however, that will probably be ratcheted back a little bit. I'm hopeful that the deregulation we'll see out of the new administration should be a positive force there. But that's kind of my biggest worry, biggest headwind that I might see coming.
Rob, we've seen both oil and the 10-year Treasury yield rising recently. What are your predictions for both of those for 2017?
Well, Lauren, I think we'll continue to see the 10-year nudge up a little bit, probably maybe up to about 2 3/4 points by the end of the year. I think crude also is going to continue to nudge up a little bit, maybe to $60 a barrel. So nothing dramatic on either side, but definitely a continued nudge up on both of them.
Rob, looking at the 10-year yield, though, at what point does it become a problem for the markets? And is it a positive sign of what's going on in the economy and the markets, the reason that people have sold treasuries and you've seen that move up in the yield?
Well, I do think, Dagan, that it is positive. I think rates in general are rising because people are starting to realize that the economy is doing well. So, but then, of course, the flip side is there's the old saying that the Fed takes away the punch bowl before the party really gets going. That could be reflected in the 10-year rising, and at some point, yeah, it's going to be competition for stocks, no doubt.
You were bullish earlier about earnings growth for 2017. Why is that?
Well, I think that you know, number one, we've seen so many quarters recently of very poor earnings growth, and I think from that what we've gotten is you know, corporations have been trying to wring as much cost out as they can, and I think in 2017 we are going to start to see the fruits of that from a cost standpoint. I also think we're going to start to see more revenue growth, as you know, because the job market seems to be getting back into gear. And so those positives, along with the new administration policies, I feel strong about 2017.
Rob, great to see you so early this morning. Rob Morgan, Chief Investment Officer at Sethi Financial. Take care, Rob.